Imagine this. You open a banking app, tap Apply for Loan, enter your salary, hit Submit, and before you can even blink, the result pops up on screen. Approved. Or worse, rejected. Not tomorrow, not after a phone call, not after a bank officer in a suit reviews your file. The decision is instant in 3 seconds. No human ever looked at your application. Because it wasn't a person deciding your financial future, it was an algorithm. Today we're diving into a world 99% of people don't even know exists. The AI systems that secretly decide your loan approval, insurance eligibility, credit score, interest rate, and maybe even your future. And we're going to break down how they work, how they judge you, and why you may already have been rejected by an AI without ever realizing it. So, let's start with a question that sounds simple, but is way more powerful than it seems. When a bank decides whether to give you money, what are they really judging you on? Most people say income, credit score, job type, past loans, maybe spending habits. True. But today, the AI looks at far more than that. What's your phone battery level when applying? Your typing speed in the form? Whether you scrolled the terms and conditions? Or just clicked accept instantly? Even how long you hesitated before entering your salary? Yes, these are real inputs used by modern loan decision AI algorithms. Welcome to the world of AI-based credit scoring, also called behavioral scoring, alternative data lending. Let's go back in time for a second. Before AI, loan approval was a slow ritual. A human underwriter stared at your documents. Bank statements, payslips, references, maybe even called your employer. It took days, sometimes weeks, but at least you were judged by a person. Then fintech arrived. Instant loans, 10-minute approvals, on-app credit cards. Banks didn't suddenly get faster. They just replaced humans with machine learning models. And here's the shocking part. The AI doesn't just look at your bank balance. It looks at who you are, based on the data trail you leave behind without realizing it. Let me give you real examples used by companies right now. People who keep their phone battery above 50% are more reliable borrowers. People with more than 50 apps installed are statistically more likely to default. People who scroll up and down the loan page nervously tend to be high risk. People who use iPhones default less than those who use low-end Android phones. None of this is fiction. These patterns were discovered by AI after studying millions of borrowers. So how does it work? The moment you click Apply, the app collects everything it legally can. Your device type, your location history, your transaction behavior, typing rhythm, contact list patterns, app usage, even your selfie angle if they ask for face verification. All that data is fed into a risk prediction model trained on millions of past users. And in less than 300 milliseconds, the AI calculates one number: probability of you repaying the loan. If the number is high enough, the screen turns green. If not, rejected. No explanation, no appeal, no human. And here's where the story gets darker. If the AI rejects you once, future AIs may also reject you. Because every rejection becomes a data point. You're now a person who got denied credit, which lowers your future score. AI doesn't understand fairness, empathy, medical emergencies, or personal tragedy. It only understands patterns, and patterns can be biased. For example, if historically, people from a certain neighborhood defaulted more, the AI will silently punish everyone from that area, no matter how good they are. If people with gig economy jobs struggle more, the AI marks all freelancers and Uber drivers as high risk. That's not just unfair, that's automated discrimination. Even scarier, the bank itself may not know how the AI made the decision, because many of these models are black boxes. But here's the twist. This same AI scoring has also helped millions of people get loans who never could before. A farmer with no credit history but consistent mobile bill payments? Approved. A student who has never borrowed but always pays phone recharges on time? Approved. So this technology is not just scary, it's powerful. Now let's go into the future. Banks are now testing face-based emotional AI, where your loan decision may depend on your micro-expressions during a selfie video. Yes, your facial stress while applying can affect approval odds. China already uses social behavior scoring, late bill payment, USA is testing mortgage AIs that scan your browser history to assess risk. So what should a normal person do? First, understand the game. Everything you do digitally feeds an AI somewhere. Your shopping, your browsing, your late-night food deliveries, your subscriptions, even how often you switch SIM cards. Data is the new resume. Second, watch out for apps that request excessive permissions. If a loan app asks for contact access and file storage access, it's scoring you based on who you know and what you download. Third, always remember, in the age of AI lending, your behavior is your credit score. So now the biggest question, if an AI decides your financial future in 3 seconds, shouldn't you have the right to know why? If this opened your eyes, hit like, subscribe to TechWise Show, and turn on notifications.